So I'm going to let you know as an investor why I don't personally flip homes and why it is that it seems every YouTube channel you watch on real estate seems to have their own strategy on whether or not to do so. If you look at channels like Ryan Panada, he will talk about flipping homes being his path to success. And then if you look at channels like myself or Chandler David Smith, you're going to notice that we don't flip at all. We instead buy and hold everything. So what is the correct answer here? Should you flip? Should you buy and hold? Should you buy multi-units? Should you buy single-family homes? Everyone seems to have a different strategy for this. But you're going to find in this video the reason we all seem to have something different, why I don't flip homes personally, and why you're going to notice it's much more dependent on the market that you're in is the reason one person might flip and maybe why you should not. Now, the whole concept of flipping homes and the reason everyone thinks that's what we're doing is because of HGTV. And what they did was they popularized this whole concept of going in, remodeling an entire house and just demolishing it with sledgehammers and such. And you're going to notice two things about these HGTV channels. One, the people making the money on the channel are always the contractor. Yeah, they might show themselves swinging a sledgehammer, but they're really just managing a project, and they always make their money up front, whether or not the flip itself actually makes any profit for the owner or the homeowner that they're working with. The other thing is, they're swinging a sledgehammer, and that's already a problem in and of itself. So if you're already taking down walls and doing a lot of renovation to it, then you're probably always going to lose money. So many of you might be surprised by this little fact, but I'm going to go through an example here in Baltimore of why it is if I started flipping homes, I would lose tons of money and probably go bankrupt. So for this whole example, let's look into the average house in Baltimore City. It's going to be a $150,000 single family home. I actually always recommend you do like just normal little entry homes, starter homes for families, and I'll get into why later on in this video. But essentially, $150,000 is where we're going to start out at. And then you find one for $60,000. And let's say then you call some contractors and they're like, yep, it'll take 30 grand to renovate this. And with $4,000 in closing costs, you're pretty much looking at a $56,000 profit. And the thing is, most new investors, they see that math and they instantly think, all right, perfect. This is going to work. That's what I'm going to do. I'm going to flip this. Even if my math is way off, I'm still making tons of profit. Well, I'm going to show you today why that's not true at all. Now, the more savvy amongst you out there may have noticed that you're probably missing out on some short-term holding costs. So a lot of you probably don't have $94,000 to throw at this project, which is what you're going to need to renovate it. So you're going to get a hard money loan for this kind of project. Hard money loan for $95,000, rounding it up, is going to usually be from 7 to 12%, maybe some points and fees, but I'll go easy on you and we'll just say it's 12%. No fees other than a $1,000 origination fee just to make the loan legal and put a lien on the house. So they're going to do this at 12%, and that is going to be $11,400 annualized, but you're not going to hold it for an entire year. You're only going to hold it about 4 months. Your contractor said, hey, this is just going to take 4 months to renovate. So 4 months, and you divide that by 12, you get $950 a month. You multiply that by 4, and then your holding costs are $3,800 just before your origination fee. So a total of $4,800 to renovate this home. So we have to subtract that right off the bat. Next, many others of you might notice that I've left out realtor fees. The realtor fees are generally going to be about 6%. You're paying both the buyer and seller's agent. Now, some of you might be able to remove this cost, but I'm going to assume that many of you are not realtors out there. You're new investors who are just getting started. So you probably need a realtor to help sell your house. Yes, you could negate this one entirely, potentially, but probably not the buyer's agent. Most likely any buyer who's going to buy your home is at least going to have a buyer's agent, which means you're still at least going to pay them. So you probably won't remove as much of this as you might think. So we'll go ahead and factor in that 6%. It's going to be $9,000 in the case of this deal, since it's 6% of the sale of the home, the $150,000. Now, even still with all of this factored in, you're still making a profit of $42,200. So what's the big deal? And then that's usually where we get to the point where people realize why you lose money on flips and why you probably shouldn't do them unless you're a very advanced investor or have very specific home types, which I'm going to get into in this video on what you would need to make this whole formula work. But first, let's get into why it won't work for me here in Baltimore. So here in Baltimore City, I have to deal with a lot of older row homes. These homes are 100 years old and generally don't have HVAC systems, have older plumbing like galvanized steel plumbing and such. So you have to rip all that out of there and generally kind of re-renovate the home. So you're going to start doing almost what feels like a gut renovation. In fact, for a lot of you who watch my channel, you're going to notice that I'm constantly digging into the walls over and over again in many of my episodes. I do renovations that channels like Meet Kevin probably would never want to do out there in LA, or Graham Stephan if you know them. So when you dig into the walls though, when you start renovating all these things and opening up the drywall, you're going to notice things like burnt, beams from maybe when the house was on fire, or, it's water damage or termite damage, or, different plumbing issues and whatnot. And all of these are going to be surprises because they're going to be completely covered up in the home. You can kind of guess at where they are, but for the most part, you will run into surprises. So we're going to add an extra $6,000. And for those who know and watch my deal breakdowns, and I can link those in the description below, I do deal breakdowns where I always put in a $10,000 to contingency just because of little surprises like this. Also, another thing many of you may overlook is the actual amount of time that it takes to renovate these houses. See, if you talk to a contractor, they're going to tell you a variable amount of time that they think it'll take to renovate the home. And usually this can be like 2-3 months. And that's true. Many contractors can do it in that time, but things are going to go wrong that you didn't anticipate. Permit inspectors are going to back you up quite a bit. Maybe even if they show up at all, sometimes they may find things wrong that you didn't notice, and it's going to push your project back, and then you're going to have utility company issues and whatnot. A lot of these other inspectors who are involved with this process can get in the way with you selling your home in a quick manner, with you actually, getting through the renovation process. So we're gonna have to add some time for that. Also, many of you may run into contractor issues. Contractors sometimes disappear and don't show up, or maybe take longer because often they're juggling multiple jobs. In fact, you're going to find contractors are one of the hardest part of this business. And many of them are juggling so many different jobs. They have so much difficulty saying no to another job that they are way overwhelmed with everything that they're doing. You're going to find this as a constant problem. So we're going to have to add on time for that. And that's if your contractor doesn't scam you in the first place. The other thing is, when you're factoring in flipping a house, you have to factor in the time it takes to sell the property. Yeah, it's easy to think in a market like this, everything's going to sell quickly and all that, but buyers can drop out. A lot of your buyers for flipping is going to have financial contingencies where they have to get financing from a bank. So if you don't screen your buyers extremely well, like advanced flippers actually do, then you're often going to run into an issue where a buyer has to back out last minute, and these closings can take already 30 to 45 days before they ever finish. So this is already a major hindrance. So we're going to add on 4 months to this entire project. Now, what that means though is that you're holding on to that holding cost for 4 more months. Now, I'm not going to calculate utilities and all that, but we do have to add on another $3,800 for your hard money costs. And that's assuming you didn't have to do an extension fee for going way over time. Now, another thing that happens is your contractors will have miscommunication issues, or you will miss things that you didn't notice during the layout and planning of the home. So this often happens with new investors where they'll close up the walls and all of that and then realize, oh my God, we missed an outlet here above the stove where the microwave goes, or oh my goodness, I forgot to put, these little features. This commonly happens, especially as you're juggling around multiple subcontractors. I'm assuming here that you're gonna manage your renovation project just like I do, because if you hire a GC, a general contractor, to manage it for you, they're gonna add on an extra 20% of the cost of the entire reno into this. So we're gonna save some money and we're gonna manage it ourselves. But let's assume you did all that. Well, the interaction between the plumber and the HVAC tech and the electrician, that really starts to get in the way. Remember, they all kind of need each other, even just a simple furnace. If you think about it, it's, the plumbing for the gas line has to go into it, the electric line has to go into it, and all these coordinations. So, and that's just that specifically, but many other interactions between these three trades. If you don't manage this correctly, which oftentimes as a newer investor you won't, if you're not systemized, you won't, then this can add on your costs. So let's say for things you missed, another $2,000 just for that. And next we have seller subsidy. Now the seller often is going to ask for seller subsidy when they're buying the house. This is especially true for like VA home loans and FHA and all these government, subsidized programs. Every homeowner is going to ask for this most of the time, 4% being the average. So that's going to be another $6,000 that you're going to have to add onto the closing costs for the seller to help them out and to get this deal for you. So now congratulations, you have just gotten a profit of $23,400. And before you actually celebrate, you're going to realize what happens is you take that home and you spend it all, and then at the end of the year, you come up against this thing called taxes. And then that's when you have quite a bit more. See, Uncle Sam wants his cut too. And remember, you're flipping a home, so that means it's active income, not passive income. You can't use a lot of your deductions of passive income against your active income. Now, keep in mind, I'm not a CPA. You should seek actual, a CPA for your own specific thing. But let's go with the average situation here for a normal flip. Now, for the state of Maryland, you're going to be paying 5%, and that's going to be $1,170 on your profit. So let's take that. And then Baltimore, well, they want some too. So that's 3% though. So $702 right there. And then now for capital gains, anything under $441,000, you're going to have to pay 15% capital gains rate. Well, let's assume this is your only flip. I mean, honestly, otherwise you'd be paying 20%. So let's just say it's your only flip this year and all that, so you're not making all that money. So 15% is going to be $3,510. And then you got to pay your self-employment tax. This is your FICA, the Social Security and Medicaid and all that stuff. So then you're going to have to pay another $3,580 because you don't stop paying that until you make $137,000, which in this case, we're going to assume you're not. So after that, you finally get your after-tax profit of $14,437.80. And you might say that's still okay, it's still a good, nice chunk of money maybe. But remember, this took you 8 months to do. So 8 months, if you divide that by, the 8, and you'll get $1,804. And then if you divide that by 2, which is your standard predictable, paycheck period, you're going to get $902 a paycheck effectively is what you just paid yourself. This is not great. Honestly, you probably would have been better off just keeping your job or wholesaling the house. Just assign the contract to somebody else, make your 10 grand up front, and let them worry about all that other stuff. So this is why you're going to find a lot of flippers in the city actually do just wholesale deals. And honestly, this is the reason this stuff really won't work for you. So what do you need to actually be a good flipper in the city? Well, I mean, ultimately, one, you're going to need a cosmetic renovation. Now, keep in mind, that is common across the board. I've been saying it all video. Flippers do not do guts most of the time. They're not going around just tearing balls, especially on starter homes. Maybe for a luxury home, but even then, there's a lot of other issues you can run into since there's less buyers and more things that can go wrong due to the size of the house being a lot larger. Baltimore is a renter's market. You have to understand that here in Baltimore, we can go by the 2% rule. The housing prices are so low and the rental rates are so high that we can get that. A lot better rental rates. Also, the pool of renters is massive, and so that's another thing that we can capitalize on. So this is why here versus like the Midwest or Vegas and whatnot, you're going to see different strategies being incorporated. Now, there are some other things you can do to make this work. So let's say you are doing all the work yourself, and I'm sure a lot of you are thinking that. You're going to do the work yourself and all that. Well, honestly, this doesn't work for 2 reasons. One, scale. You can't, if you're going to go around installing all the backsplash in your properties, then you can't scale this very efficiently. And even after you do all of this work on your one house, let's just say you're like, I'm just going to do it for me with my one house. After all the hours that you put in, if you actually like pay yourself for all that time and effort, I mean, I was factoring like a normal paycheck job. Like for you put in way more hours and it probably took way longer. So yeah, while you probably made a little bit more profit, it probably wasn't worth all the time that you put into it. So the last thing is the large teams that the advanced investors have. Remember that most of these flippers and investors working in the city who actually do flips, they often have teams who will do the jobs for cheaper. See, you and we are having to sub out our work. And so while I might have good relationships with contractors because I've been doing this a while, I get cheaper prices than many of you watching this video. Even I can't compete with owning your own contracting company and knowing they're only working on your job full time. So these are reasons that we really can't flip homes and why some others might. So like and subscribe if you enjoy content like this. I always like to go into more detail than a lot of the other channels, as much as I can anyway. And let me know if you have any questions about this subject, and I will comment below and talk to you all very soon.